Hello there and welcome to Core Finance, where I'm joined by Rahul Khanna, who's FX strategist at Trademade. How are you today, Rahul?
Very good. How are you?
I'm okay. Well, it's a good time to be an FX strategist, isn't it? Plenty going on?
Yeah, there's
leading the markets?
There's plenty of action in the FX market at the moment, and this week in particular, really busy. What will happen at the end of the week is still, for everyone to see. But I think starting. First thing market is looking at is the OPEC and non-OPEC meeting today, which is going on in Russia, St Petersburg, where oil ministers are meeting to see, whether they can curb the oil production for Libya and Nigeria. They were out of the fray in terms of oil production cap, which happened till March 2018. So they will look at if they can curb their production, and oil sort of seemed to have jumped last week on that news, but then it has come back. I think it's going to turn around to be a sort of a non-event, but we're still constructive on oil relatively, because last two data points that came out from inventory has shown a huge drawdown. So I think we're still constructive on oil, and I think in terms of how it impacts the FX market, we don't see much changing. CAD is already so strong, and NOK is also relatively rallied in the past few like a week or two. So we'll see not much effect on the FX market, but still outlook for oil constructive.
But isn't the elephant in the room just basically Donald Trump? I mean, people are just saying, oh, what's going on here? You've got a president, embattled president there. We don't want to be in dollars.
Yes, nobody wants to be in dollar at the moment.
But is it to do with Trump? Is it a Trump?
Yes, it is a Trump thing. If you look at it, after looking at how Fed has not signaled anything, and dollar has been sold off on the back of it, and ECB sort of more giving more to the markets. So people are chasing euro. Even if you look at dollar yen, it's come back really sharply because dollar is sort of a sell. And if you look at the yields, they corrected sharply. US 10-year yields have corrected sharply. So dollar yen again coming down from there. So coming back to the Trump story, there's testimony going on on Wednesday. We don't see much out from the testimony, but the market is sort of detached, and they're not looking at anything positive coming out of US. FOMC on Wednesday is also unlikely to be positive. So at the moment, there's no catalyst for dollar to rally. Data has been normal. FOMC and Fed has been, at best, neutral. And on the top of this, Trump scandal. So if you look at all of this stuff, there's no positive dollar story emerging from this. So market is not looking at dollar in terms of buying opportunities, looking at more in terms of selling opportunities. So if US GDP on Friday, let's say, doesn't pique market's interest, then the bandwagon is going to get onto dollar to take it south.
Right, and how much of what we're seeing currently is a general risk-off situation as well? So we've got people buying the yen, buying the euro. I mean, you've got that overlapping as well, because people are saying, well, the equity markets, I mean, the FTSE 100 is down at 1% today, which is, it's like a horror movie for the FTSE. IMF also kicking the US and UK economy. So that's a risk-off atmosphere, which is, again, not helping the dollar.
Yes, I think that.
Or dollar yen at least.
I think it's not as plain as risk-off trade. If you look at it in general terms, Aussie, has been positive.
Normally, the risk-off environment, people used to buy the dollar, but now they've got to go somewhere else.
Yes, I mean, if like this, I would say that it is not as plain as a risk-off mode or risk-on mode. There's few things going on. If you look in the details, look at Aussie, like I think a couple of weeks back, I had a chat with you and I said Aussie is going to rally. And it wasn't doing much, and it has rallied, but there's more upside potential in Aussie at the moment. Kiwi could keep going. The story is that these banks are not moving anywhere in a hurry, apart from ECB showing some sign. Even that is not going to happen anywhere in the next few months. So there's plenty of low yield carry trade sort of going on. So market is still sort of positive on that line. They know the central bank's not going to lift off in a hurry, so there's no panic there. But yes, dollar looks like a sell, so people are there trying to sell it. Yen is only moving in terms of yield. So if you look at Euro 10-year yields and US 10-year yields, they've come back, and so is Euro yen and dollar yen. So there's a bit of a yield play going on in the market. I would say not more like a risk-off mode, but more like a how the yields are reacting.
But so it's an unusual situation, an unusual mix at the moment, would you say?
Yes, it is sort of, we haven't seen like this kind of situation in a while. But like I said before as well, if you look at the general state of the markets, it's sort of a positive story, because the markets are still seeing that the QE is going to end, if not now, maybe start of next year. So things are moving, first time in a long time, is moving towards market saying, all right, these banks gonna start to taper. Economy is looking up. Oil forecast is looking up. If you look at economies, they're looking up. Look at Euro PMI, manufacturing PMI came out today. Okay, below expectation, but they're robust. So if you look at all the economic data that's coming out, apart from a bit in the US, they're sort of positive. So market is saying, all right, let's take a longer term call, and that is why Aussie looks attractive, Kiwi looks attractive. So these risky currency looks attractive. But at the same time, because yield play is in, hence yen is also sort of strengthening. But in the longer term, I think the yen is still a sell, because BOJ is not moving anywhere. If you look at the scheme of things, so it's an unusual situation. But I would say, how the market is reacting, I think is pretty much to what's going on.
We'll see how it continues to react, especially after OPEC. But in the meantime, Rahul Khanna, FX strategist at Trademade, thank you very much for coming in today.
Thank you, Zach.